Let's get to Bank of America's John Murphy now. John, you mentioned many have said this could increase car prices by $3, $4, $5, maybe $10,000. Is that why shares of the big three, I still call them that even though it's Stellantis, is that why you think they're down today, or how do you unpack this?
Well, Kelly, thanks for having me. We refer to them as the Detroit Three now, not necessarily the Big Three, given their size. So I concur with that. I think our title of our note today was the chicken tax 2.0 goes whole hog. So basically, there is a precedent for this kind of tariff, a 25% tariff on body-on-frame trucks in the United States that has really benefited the D3 on their large trucks. So I think when Trump looks at this and other folks and sort of the trade advisors, they think that if you put a 25% tariff on all vehicles, we can bring a lot of manufacturing back here to the United States. And that may be possible, but in the interim, it's going to create a lot of pressure. And when we look at Ford, they're only 20% imports outside of the U.S., and that's why you're seeing the stock react a lot less than GM, which is about 50% of their sales in the U.S. are imported. So I think there's varying degrees. But I think that the big question here, Kelly, is if we see prices going up as a result of costs going up either on vehicles or parts, that means that the consumer is going to have a harder time affording these vehicles. And we estimate you could see a 2.5 to over 3 million unit hit to the U.S. sales rate, which is at a run rate of about 16 million units right now. So there's some real pressure on the companies, the economy, and then sort of the whole value chain.
Sure. I mean, a 2.5 to 3 million hit is bigger than some other estimates that I've seen. That would be sizable indeed.
Yeah, so it would be very large. But I think the end game, as Eamon was just talking about, is to try to bring jobs back to the U.S. So if you think about the 7.6 million units that are imported, if you brought that all back to the U.S., that would be about 30 manufacturing plants, about 105,000 direct jobs, and about a little over 1 million indirect jobs. So if your focus is purely jobs in the U.S., this is one big way to swing it. But you got to remember, there's another side of the equation, and there'll be a sucking sound of jobs being lost from Canada, Mexico, Europe, Japan, and Korea that are also going to respond.
Of course, and that's why they're furious. And we'll see if this ends up being more of a negotiation tactic or if they are permanent, like the president said. Just repeat, John, what you just said there, that if this was about kind of bringing all of those 7 million imports to the U.S., you think we would build 30 auto plants, create 150,000 direct jobs and 1.5 million indirect jobs potentially, if all of them were now U.S. made?
Yes, 105,000 direct and over 1 million indirect jobs, yes, if you brought them all back tomorrow. Now, I think it might be a lot more sensible to do this over a 4 to 5 year phase-in period so you don't have the shock to the system and you can work with these countries and companies to actually affect that change over that 4 to 5 year period, because that's as fast as you could ever do this, barring any other, any permitting constraints or capital constraints or regular constraints that you would run into in building a plant.